Hello. Hello, everybody. Can you hear me? Hi, guys. I hope everything is good. Hi, everybody. I hope everybody is having a good day. And I hope everybody is excited. I hope everybody is excited to get this day going. Okay. So, yeah, guys, I hope everybody's having a wonderful time. Ooh, and we can see some stocks are trading down. All right. And we will be going live in 9 minutes. So we got the market bell going. So I hope everybody is having a good time and that we have a good day today. And things are going good. So if there's anything you would like me to know and talk about today, please let me know. So hope you what's anything how are you guys? So yeah, man. Um, what's going on? So guys, I've got some new information. We're going to talk about a lot of new stuff. We can see some S&P 500, Microsoft down 2.5%, Oracle up 3%, Palantir 3%. So the market seems to be like it's pushing up a bit, and some sectors are going down. So we got some sector rotation happening, and that is what is most likely happening at the moment. And companies are pushing out their new net asset volume. So yeah, and that means a lot of changes will be happening. So if everything is good, let me just turn my music a little bit more down. And yeah, let's get the YouTube out the way. And I am streaming live from America. And today we have some cool weather, some and things are going good. And we've been eating a lot. It's a week finished now from Thanksgiving, and it is the 4th of December 2025. And we are a few weeks away from the new year. So, yeah, things are excellent. And if you guys want me to talk about anything specific in today's live trading seminar, please let me know. And yeah, we can get things going because things are going to be going upwards from now, and we will be looking at technology, software, infrastructure, and a lot of new things coming from the communication services. We got a bunch of stocks that we can also look through as we do on the daily. And then we have got the US dollar index that we can see is also dropping. S&P 500, we got the US 100 and the volatility index. So yeah, we can see the volatility index is currently going down, guys. Down, down, down. But this downward trend line we could slightly change now, reposition things, and this we would have to now adjust, and we could see it's now on a complete downtrend looking on the daily. And we got the S&P 500. We would now have to change our trend lines. This is from a week ago. And if there's any information that I'd also want to look at, we could see the markets are last week it was in the red, and we got some fear. And fear is driving the market, and the S&P 500's moving on a positive, a much higher positive than the 125 moving day average. You could see in April, July, June, October, and we got in the net new 52-week highs and lows on the NYSE, which is the New York Stock Exchange. Stock price breadth, we got the McClellan volumes summation index also moving at above 1,000. So the market is made up of thousands of stocks, and on any given day, investors are actively buying and selling them. And this measure looks at the amount of volume of shares on the New York Stock Exchange, and prices are rising compared to the number of shares that are falling. All right. So yeah, guys. So the stock market is made up of thousands of index. So we have a put and call options. So we've got our put and call options, our contracts, and the investors right now want to buy or sell stocks, indexes, or other financial securities at an agreed upon price and date. And our volatility index, we can see it's at a low. If we look over here, we can see our VIX and its 50-day moving average, so we could possibly see. So one of the most well-known measures of market sentiment is the CBOE, Volatility Index, or VIX. And VIX measures expected price fluctuations or volatility in the S&P 500. And it's kind of at a neutral stage right now. So yeah, it's at a neutral stage right now. And the VIX often drops on days when the broader market rallies and soars when stock plunges. But the key is to look at VIX. Okay, VIX over time. So it tends to be lower in bull markets and higher when the bears are in control. So we currently in a bull market, we could say. And yeah, things are going up, 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 up. And that is excellent. And let me get rid of this number one. Just Let's just delete some of this stuff. And in 2 minutes, we're gonna have the market bell. And yeah, we got a lot of trend lines that we can adjust. And a lot of things we can change and move. And look at our volume. See, guys, we got low volume at a high price again. That means we could also potentially see some market fluctuation happen to the downward. And if we look at the US 100, we can make some changes over there and a bunch of other stocks that I'll be going through. So yeah, guys, the S&P 500 is currently at a strong buy level at the technicalities. And so we can look at our FinViz and our map. And you can see Dow Jones up 0.8% from yesterday, NAS, S&P, and we got a lot of other information and bunch of tickers. Oof, we got a nice big change here, 371%. A lot of volume moving in and out the market, and a lot of volume moving down. We have got a trend line support resistance, got a wedge up, wedge down, ascending triangle and descending triangle. So there's a lot of things we will be going through, and I will get it started in 1 minute. Okay, let me get the market bell. So in 1 minute, we got our bell noise coming up. So give me a second, guys, and I can get that going for you in a matter of seconds. Let me get my water, and yep, here we go. Here we go. That's our market bell. So we got things opening up right now, and I will get started. And it's a loud bell. Ding, 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 ding. Let's get going. Cool. So guys, let's start the session off, and let's have a good one. So, good morning, everyone. Welcome back to the Thursday Masterclass. So, what I would like you guys to know that today is not about searching for new opportunities. Today is about our auditing and discipline. And we are here to review the successful execution of our first core December trade, and a trade that went precisely according to structural blueprint, and it will set our tactical groundwork for the remainder of the month. But we first have to look at a few other technicalities and other stock indices, so then I will be able to tell you exactly what's going to be happening and how I will let you guys know what's happening in the Telegram group. All right. So, for the remainder of this month. And once again, my name is Andrew Scott Whitemore, and my decades of fiduciary experience demand one thing. One thing, guys. I just need one thing from everybody so that we can have a good time, and that is accountability to the system. All right. Accountability to the system is all that I require from you guys. We do not celebrate luck, we audit execution. So, let's begin by grounding ourselves in the current reality of the market before we dive into internal mechanics of our team's victory. Yay, our victory. So as you can see, the stock market just opened up. Everything is now on looking all brown and gray. But let's just wait a little bit as this will update in a few moments. And yeah, so if I look at CNBC, Nvidia's got a cash problem, and the euro plans to use 100 billion of frozen Russian assets. But this is all just noise at the moment. This is just all noise at the moment, guys. What we want to look at is US markets and market movers, and this will give us a lot of information. So we can see Dollar General Corp surging 9.5%, Meta Platforms 4.5%, crazy. And we also got things like Block and the top decliners. Got Micron going down, Costco down 2.5%. And because the market also just opened, new information is coming out. So yeah, we got the Marriott down and a bunch of other information that I want to share with you guys. All right. So our standard market analysis is navigate the year-end flow, and we're going to focus on high-level market indicators. So guys, this is also going to confirm the structural tailwinds and set the tone for December. All right. So the macro picture remains consistent with our December analysis, but velocity is accelerating. Velocity is accelerating. We've got a lot of volume coming in. A lot of volume. 20 trillion right now. So we got a lot of money moving in and out the market. And that's okay. That is okay, because all of this information will give us a good indication of what we will be doing next. So now we got a descending triangle. Oh, yeah, so we can see what are we going to do. What is the next thing to do, guys? All right. So the market is currently consolidating after a burst of international year-end buying. So the macro view. Structural tailwinds are still squarely within the three powerful structural forces of December, guys. And we got window dressing pressure, which are funds that are actively bidding up their winners to maximize the final net asset value. Okay, we got a lot of things. We got a descending wedge once again. So a lot of this information most likely means that we're going to have a push up over here, because the volatility index, when it's on red, what does that indicate, guys? That indicates that we are going to be in a bull market. So usually when it's up this time, that's when we were in a bear market, and that is when we saw a lot of sell-off happening. That's when we lost billions of dollars in the market. So this creates a powerful predictable floor under blue chip sectors like technology and financials. So if you look at some tech stocks, we can see we got a lot of low volume, and if we can draw maybe some trend lines right here, we can, and if we draw one from the top down, we will most likely be having a descending wedge happening, guys. But this is not where I want to be, so we could most likely draw. Oof, technology is booming. Spack bam, for the past year it's been rising up insanely. Okay, and that is insane to see. So we can most likely draw a line from here. Yeah, we got a descending wedge. Okay, so we will see where we will be going up soon. And we got a lot of low volume coming in right here. So if we look once again, we got 195 million for the day. Over here we got 145 mil for the day, low volume. And over here we had extremely high volume coming in, but on a declining candle, which is where the bears took control, and we are finally moving up to a consolidating level, and we are seeing the market consolidate and becoming healthy once again. And a lot of that could be seen in something like Meta. Meta was I just saw reports that Meta is up 4% for the day. So yesterday, boom, we had a nice big spike, and it went up, 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 and now it's just going down a little bit again. Okay, so that is Meta for you guys. And if you look at the amount of volume that's coming in for Meta, we had $1 billion moving in. 1 billion. Crazy. Okay, so that's the tech stocks. And if we look at financials, let's look at the Stable Street Financial. So we also have this one is moving in a way that it is kind of unpredictable. Very, very unpredictable. This is not really something where we kind of want to get in right now. So we want to chill, take a tequila, and relax. Okay. So no trend lines for this one at all because it's too unpredictable. Look at those spikes. It's going, and this is on the daily, guys. And if we go on the 4 hour, we can see things are also not the greatest. And on the 1 hour, yeah, it's not the greatest. But we could draw a trend line possibly from the 24th. Let me see. We got a 1, 2. Yeah, yeah. We can move something up like that. Okay, guys. Let's move it a bit more down. Over there. That's kind of what we want. We don't want it slicing through these, but it is what we will have to do for now. Cool. So we got the stock market, the State Street financial sector. It's looking good. My cousin actually works for State Street financial sector, so it's a really, really good place to be at, and he is loving it, making billions of dollars. Okay, not billions. He's making tens of thousands of dollars. But yeah, guys, we got State Street financial sector also looking healthy. It's currently on the green side of things. So yeah, guys. So also one thing is we got tax loss reversal, which is the pressure selling from tax loss harvesting in November is now largely exhausted. So no more tax loss, and this systematically removal of supply sets the stage. Ooh, we don't want that. So this is going to set the stage for rapid, almost parabolic moves in small cap sectors, which often carry the highest concentration of stock loss candidates, and liquidity compensation. So, guys, as major desks wind down, the daily trading volume is going to become thinner. So, people are going on holidays, the volume is going to be lower. So, if we look at, yeah, you can see here we got a nice decline of our trading volume because it is November. Okay. And a lot of people are going on holiday. Over here, we had a massive saw of volume, which was when we had a massive sell-off also on the S&P 500. During that time, we got billions of dollars wiped out of the market, 2 billion to be exact. And then we had a huge surge of cash coming straight back into the market. So, as major desks wind down, the daily trading volume is becoming thinner, and this has a dual effect. It amplifies the impact of institutional buying and amplifies the risk of sudden volatility. All right, sudden volatility. So, guys, if we want to analyze some popular stock trends, the S&P 500 is what I'll look at now, and we could see some Nvidia. But the structure of the S&P 500 ETF is currently exhibiting a textbook shallow pullback. Got a textbook shallow pullback. All right. Boom, boom, boom. Yes. All right. Let's move this bad boy out the way. Okay. Shallow pullback. So this also shows us the new price action. So the index is pulling back. It's pulling back. And from its recent high, but the retracement depth is minimal, only 20 to 30% of the preceding move. All right, so it is, yeah, guys, we had the S&P 500 at its all-time high at 6,919 and down with about a 10 to 30% pullback. Very shallow, but not a lot. Okay, and yeah, guys, so we also had it down there at the bottom. Ooh, okay, I drew that crazy, crazy line. All right. So we got a lot of information that we can work through and that we can look at. But most importantly, what I want you guys to know and take into consideration is this volume metric right here. Volume is going to be lower. So during December 4th, right now we got low volume, and that just shows that because people are going on holiday and a lot of people are taking holidays, going away from the desk. They are now getting the 13th check. So, and they've made a boatload of cash for the year. So, why should they not have a good time with their friends and families, if you know what I mean? So yeah, guys, that is it. And the volume footprint, crucially, the selling volume on these pullbacks, the selling volume on these pullbacks is consistently declining. All right, you can see we got it's consistently declining. And the conclusion, this is the ideal institutional signal. So this is the ideal institutional signal, and this means the market is not selling off. It is taking a necessary breath. All right, it's taking a necessary breath. So the buying pressure is good and it is persistent, that the price is not allowed to descend to a true support level. Okay, and a true support level we would be down here. Okay, not there, that is okay, but down here is our true support level. So if I put in a box, we could consider this our support level right here. Okay, support, and over here we will have our resistance level. Okay, we can put it over there. Let's put it nice and precise. Nice and precise is what I like. It is how I can put everything into a good place for you guys to see. It's just nice, and when things are looking symmetric, I am happy. Resistance. Okay, so yeah, that is our resistance level and our support down below. Cool. So that is the S&P 500, and this confirms the overall structural health is excellent. Okay, guys. So we treat these shallow pullbacks as high confidence. High confidence. Okay? High confidence on this shallow pullback. Accumulation. So we treat these shallow pullbacks as high confidence accumulation zones for core long-term holdings. All right. And let's look at everybody's hate to love friend, and that is Nvidia. Okay, Nvidia. Last time we looked at it, it was because we didn't live stream yesterday or the day before. Last time we saw it at 179, and it's currently sitting at 181, with today's all-time high at 132 and 82 cents. Okay, guys, so let's just get things nice and symmetrical, put things in a good position. So yeah, Nvidia is posting strong earnings, surpassing sales and profit forecasts. And Mr. Jensen Huang highlighted high demand for Blackwell GPU, and it is mainly being used in AI applications. AI applications. So Nvidia with a 1.19% stock increase for the day, and the market is open. And the next earnings report will be in 83 days, and with a volume today of 6.3 million, and an average moving volume over 30 days is 202 million. Cool. So that's quite a lot, guys. That is quite a lot. So if we look at Nvidia, its movement often telegraphs the capital's risk appetite. If Nvidia were displaying high volume, which it's not, if it were displaying high volume stagnation, the churn, it would signal distribution and warn us away from riskier plays. Okay, it would warn us away from riskier plays. Okay, so let's look at volume, and if we put in a trend line for our volume, we will most likely see it be at this level right here. Okay, cool. So yeah, guys, that is the volume level. So over here, that is when Nvidia's got extremely high volume. That's usually when sell-offs are happening, and that is when we could possibly be buying or selling. But you'll just have to look. You'll just have to look, guys. Okay, you'll have to look what's being making total sense. But if you don't want to look, what you could obviously do is just message Sophia, as she is the lady with all the information and the lady that can tell you everything that's going to be happening and everything that's going to be going right now and right then within this amazing market of forecasts with me, your best friend. But I'm not actually anybody's friend. I am just your fiduciary advisor, and I actually have no relationships with anybody right now. Okay. And so yeah, also if we look at our RVI, it's also moving down nicely. And let me see if I can put in my RSI. So RSI, relative strength index. Cool. Let's go put that one up there. Yeah. And let's just make this a bit smaller. Okay, and our volume can also come down a bit. No, I like to look at volume. So let's keep volume as it is. So yeah, guys, we also can see that Nvidia right now on the 14-day moving average, we can see that it's crossed over. So most likely we're going to see something happening in this descending wedge. So this descending wedge is going to be very important for any further information that we're going to be making right now. So you can see we got a descending triangle, and usually with the descending triangle, information usually will bounce and then start moving on the up. Okay, so that's one very key important information. So if Nvidia were displaying high volume stagnation, it would signal distribution and warn us away from riskier plays. That is kind of what we want. Nvidia, however, is currently demonstrating glide structure. Glide structure. It's gliding. It's on a wave. It's wavy. So the glide structure and the controlled movement and the consistent volume, this affirms that large institutional money is still comfortable and deploying capital into the market and into high growth. All right, high growth and high momentum leaders. But for now, macro confidence allows our team to proceed with our tactical and smaller positions. So yeah, guys, with our tactical and smaller positions, we can make more calculated risks, more calculated mm, statements, more calculated thoughts. We can have more calculated ways to guide ourselves forward within this market, and if we are going to be seeing volume at a downward level. Okay, so yeah, guys. So there's a lot of things that's happening right now, and that is great for us to see. So the conclusion of this analysis is that my message is clear. My message is clear, and large cap market is structurally healthy. Large cap market is structurally healthy. Okay, and yeah, that was in the video on a 4 hour. If you look at it, that was on a daily. If you look at it on a 4 hour, we've got a descending wedge. A lot of information right here. And on the 1 hour, we got, oh, you could see on the 20th, it was down and it's currently moving in the glide manner. Okay, in a glide. Now it's gliding. So this is going to mean a lot for the upcoming future, and it is setting a protective framework, and the high growth indicators are positive. The risk volatility is rising due to thinning liquidity. Okay, but the overall structure trend remains bullish. The overall structure trend remains bullish for now. So usually when we have a descending wedge, we could see it's bullish, and we got glide movement happening. So yeah, guys, The structure is providing the necessary context for the fast-paced, precise execution that our team demands. All right. So it's providing necessary context for the fast-paced, precise execution that our team demands. Okay. So I hope that is good for you guys. And we are going to take a break shortly. So I hope everything is good. And we will have some good information soon for you guys. All right. So, yeah, guys, let me take a 1 minute break and I will be back with you shortly. Okay, guys. Let me also just have a look at our you at our YouTube comments. Let me see if anybody is. Oh, sorry. Is anybody Whitemore? If there's anybody in the comments that wants me to have a look at anything, please let me know. Hi, Linda. Hi, your boy. Hi, EMG. So, yeah, guys, that is me. I am just going to take a 1 minute break and I will be with you shortly. Okay. Let me just put a 1 minute timer here. All right. Cool. And let's put it over there. See if I can pull this bad boy up like over here. Okay, guys. So that is me. Let me be back in a few moments. All right, everybody, I am back. Okay, so we got somebody in the chat. Mr. Andy wants us to have a look at Circle. So let's have a look. And if you guys want me to have anything else go through, please let me know. So let's draw a trend line for Circle. You can see Circle's got barely any volume happening. Got about 2.5 million moving on the daily and 16.7 for 3 million moving on the 30-day average. So if I draw a trend line down, we can also see it's gonna make us a descending wedge right over here. Let me get this one away. Let's go on a 4 hour, see if we can get some more information. Circle has not been trading for too long, but Circle Internet Group is a good indicator for where the market is heading as well, as it is an information technology sector group. So we can put our trend line down from over here. There's not really much information to give us also right now, since it's a new stock, guys. but we also just got a wedge over here. So we got Circle Group and trading at 83, and Circle has never paid dividends and has no current plan to do so. So right now the technicals are saying that it is yep, it's bottom. It's bottom. Yeah, we can also see it's also in a current downward trend, selling, and yeah, there's a sell down for this one at the moment. Circle Group, I would not recommend. Uh, I would not recommend looking at it for the long term. I would say, as they are not paying you guys any dividends as of right now. But actually, it's also at its IPO, as its initial public offering at $84.34. So if you do trust this one and you want to hold it up to a 250, it could be a good investment. Yeah, but I think there would be a better opportunity if we just hold out a little bit longer, Mr. Andy, and I would be able to give you a better signal if I just put in some more analysis onto this specific one, and then I would be able to give you, or on our Telegram group, Sophia will be able to let you know if we will be putting in a signal for this one or not. But if you want to know exactly when we will be entering and exiting on the market, please just let us know that you are interested in the group. But I know Andy is in the group already. He's always watching the live stream. He's always following the market. He's always following our rhythm, and that is one of our top students and one of our top earners. And I know that he's been looking at this one for quite a while. It's not the first time that he's called this one out. So yeah, Andy, um, it's at a bottom. If you want to go for this one and hold it long term, because we have not been holding this one at the moment, and it's kind of at a good price, but we will see. All right. So yeah, Andy, thank you, and thanks for letting me know. And if there's anything else you want me to have a look at, please let me know. All right. So yeah, Circle Group is a financial technology company that enables businesses of all sizes to harness the power of digital currencies and public blockchains for payments, commerce, and financial applications worldwide. The company was founded by Jeremy Allaire and in 2013, and its headquarters are in New York City. All right, so let's get back to it. So, number two of the live stream, we got to review last night's group discussion, the operational logic. Okay, guys. And while previous hot entries were traps. Why were they traps? Why were they hot? So that's two things we got to look at. Why were the hot things hot? And why were the traps traps? So last night I spent several hours explaining the entire operation behind our first core stock in December trading plan. And why this level of detail? Because I don't want you just to see the results. Because I want you to just see the results. Just the 15, 20%, or 30% rise, but to truly understand the system that produced it. All right. So there is an institutional playbook that I like to call. And what I like to say is test, confirm, and strike. Strike it while it's hot. But sometimes those hot entries are traps, putting your hand in a honeypot and bees are flying all over you. So, our strategy is entirely based on institutional procedure, and we are eliminating gambling by imposing structure. So, phase one, we got to test the waters. We got to test the waters, guys. Okay. I just want to have a look over here on our market. Everything is good. Okay, we got everything on. It looks average. We got some things going down. Nvidia up, Tesla up, Meta up. So yeah, our tech stocks are always looking great as per usual. So our phase one is to test the waters. To test the waters. The scout position. And what is the scout position, guys? That is when we are going to enter the market with small initial entries to assess liquidity and market response. And then phase two is to confirm the accumulation phase. Affirm the accumulation phase. Adding capital only after structural validation. So if we see good structures, good wedges, good candlesticks, that structure is what we're going to validate our movements and entries on. And that will also dictate our rhythm. And phase three is the strike hard. Full capital deployment to maintain the trend. So we're going a little bit, and then boom, we go in hard. So we execute by building positions in batches, coordinating multiple accounts, and using a structured approach. And this approach is the antithesis of the impulse trader, the impulse retail trader who simply clicks buy on a green candle. All right. And that is the logic of avoidance. Why didn't we enter the traps? I want to revisit the two specific dates we avoided, November 28th and the 1st of December. On both of those dates, the stock was hot. It appeared to be surging. Retail sentiment was screaming, buy the breakout, buy the breakout. However, we held. We had to hold out a little bit, okay? And why? Because those two surges were essentially traps to lure retail investors in and wipe them out again and hit those SLs. And that is where everybody gets trapped. That's why we call it a trap. And that's why we have to pay attention to our market information. We have to be confident in our trading. We have to be quick. You have to be trustworthy of the market and see where things are going. But in order to trust the market, you have to read the market, right? You can't just go in and go out and expect that everything is okay. We need to read things, we need to analyze things. That's why me and Sophia are here for you. And if it wasn't for us, a lot of our retailers would have been wiped out already. And I am happy to be a fiduciary and a benefactor in your new phase, guys. Okay. So the structure wasn't stable. The price action showed a false breakout, and we learned that from our previous lesson. So a sudden spike from our previous. So yeah, from our previous a lesson, sudden spike that failed to hold above resistance. Okay, so if it failed to hold above resistance, this indicates the move was driven by short-term momentum, not sustained institutional demand. Okay, so if we look at something like, if it held over here, that was just short momentum, and then it dropped down again. If we look at Nvidia, and this indicates move was driven by short-term momentum, not sustained institutional demands. Bonds or yields probably didn't move much, or they were declined. So usually they are vice versa of one another. If bonds go down, yields go up, and if yields go up, bonds go down. So most likely here we had yields going down and bonds going up in this time. All right. So the the funds weren't confirmed, and the volume on the spike was often low or displayed the churn pattern, which is high volume stagnation. So here we've got high volume stagnation over here. Boom, high volume stagnation, and that's nice churn, and it just dropped down. So the top, near the top, signaling the institutional distribution, not accumulation. And the volatility was volatile. Okay, the volatility was volatile. The daily range was too chaotic, way too chaotic. All right. And the volume was unhealthy. The volume was also unhealthy. So it lacked the steady grinding signature of the glide. So let's look at something like Apple. Okay, so yeah, we got a nice, it's not maintaining resistance as of now. We did see an all-time high on Tuesday, 287, and it's not maintaining, but this new position could be a support. So if it maintains this, then we will know that institutional is supporting. So if you had rushed in then, you would have been buying the liquidity necessary for institutions to lock in their profits. Cool. So if you bought in there, no go. But yeah, we also see a nice glide. All right. So we also had decent volume, meaning that institutions could potentially like this price as of now. So you would have been the exit strategy if you got in over here. Institutions would just be selling off and wiping out retail. All right. So our team will never do anything that we can't win. Our team always wants to be looking at 15, 20, 30% profit gains. So we never want to do things that we cannot do. Okay, guys. So the logic of entry, safety over excitement. I told everyone last night that our true entry point came after these traps were sprung. Precisely when institutions had aligned their testing, the waters, plus accumulation, plus reversal structure. And this entry point wasn't exciting. It was not the highest velocity point either, but it was the safest, most reliable, and easiest point to capture the subsequent main upward trend. Alright, guys. So, yeah, that is what I could let you guys know about, and that is when it occurred, when the volatility structure had cleaned up and the volume signature shifted unequivocally, the accumulation. So, brothers and sisters, I've explained the operational logic in such detail this time so that you can understand. We don't rely on luck or chance. We can't uh, rely on luck or chance because that is when we will be wiped out. So what we need to rely on is a system, rhythm, structure, and risk control and coordination. This is the difference between fleeting speculation and sustained wealth generation. All right. So yeah, guys, this is one super important thing that I need to let you guys know, and I hope you do take back some things away from this because this is going to be a very important opportunity going forward. Cool. And yeah, guys. So family members, my family, all of you guys are my family. So we have indeed sold all of that stock yesterday, and the profit margin was excellent. validating our system. All right. And this decision is not arbitrary, it is absolutely necessary for the protection of our future success. And our reason A is protecting the entire December rhythm. And our December trading plan isn't about trading a single stock. It's not about trading a single stock. It's a structured layout of several stocks across a whole rhythm. So it's a structural layout of several stocks across a whole rhythm. A systematic campaign. And while this particular stock trade has ended, it's only the first steps in our entire system. And if I were to reveal the code now, external counterparties, quantitative traders, and monitoring bots could easily deduce several critical elements based on yesterday's actions. Okay, and our entry points where they can see the clean volume began. All right, entry points is where they can see clean volume began. Our team tactics. So we had to identify the exact moment we executed phase 3, which was striking hard. So it was test, confirm, and strike. And our position, which is our building method. So we can quantify the size and timing of our staged accumulation and our risk parameters. Our risk parameters. They can deduce our tolerance for volatility and our structural stop loss location. So once external predator traders grasp our rhythm and tactics, the subsequent core stocks will be targeted and preemptively positioned and manipulated in the opposite direction. Alright, because we got a lot of money in this, guys. So we can dictate where we're going to flow the market. Okay. So I just want to move over now to Netflix, just so you can have a look while I give you guys some more information about what's happening. Yeah, we got Netflix also at a position where we got a churn happening right here, and it's a very unstructured position right now. There's not a lot of information that I would want you guys to go through. But Netflix shares fell 5% as reports emerged a cash bid for Warner Bros. and and this may lower costs but likely won't significantly increase subscriber numbers. So Netflix shares fell 5% as reports emerged of a cash bid for Warner Bros. Discovery, which may lower costs but won't significantly increase subscriber numbers. So we have a volume of we got a market cap of 435 billion, trading volume daily on 11 million, and a moving volume of 40 mil on average. Netflix has never paid dividends and has no current plan to do so. So yeah, we got a massive technicality on sell, sell, strong sell. Well, I wouldn't say strong sell for you right now because it's already in a downward trend. So Netflix wouldn't be something that I would want you guys to get in or out. A potential buy, but as of now, at $100, it could potentially. No, it's not a good place to buy in. Okay, guys, not a good time. So let me get back onto what I was talking about, guys. So we put in a lot of money on our trade yesterday, and we don't want any information going out to the public, as this could potentially manipulate our position and move the price in the opposite direction and bring in profits down. Okay, and we don't want it to go down. So this will have a direct catastrophic impact on you, the listener watching right now. This can have a potential catastrophic impact on your profits. So in other words, although this trade is over, our tactics continue and we can't let others understand our strategy. All right. We can't let others understand our strategy. So, guys, that was reason A. And reason B is protecting the participants' profits. So, the second reason is equally important, protecting the profits of those who participated yesterday. And although we've sold the stock, we will still experience fluctuations later, alligator. Okay, and if I publicly share the code in the live stream now, external viewers might rush in to chase the price up, causing an uncontrolled pump and dump. And this spike and crash behavior destabilizes the market, potentially creating volatility that extends into the trading week. So, some people might use our publicly shared stock to short sell. And I hope this makes sense, guys. So, I if I go live and I tell everybody what we are trading, and we currently, for example, have 200 million in our trade, and then this goes out to other investors, and then they're like, "Oh, okay, Ameriprise has got 200 million in trade. Let's short right now." And then this is just going to bring our profits down, guys. And we don't want any insider information going in or out. So some people might use it to short sell, betting against the retail chase, thereby profiting from the public disclosure. And funds could deliberately create volatility to disrupt our next round of strategy. So they test the market's response to see if they can break our conviction. Okay, to see if they can break our conviction. And external markets analyze our entire December strategy based on our first target to predict the type of stock we will choose next. So external markets will analyze our entire December strategy based on our first target to predict the type of stock we will choose next. So guys, this would negatively impact the stability of our team's future operations and disrupt our members' overall profit rhythm. Therefore, I must adhere to one principle. All targets must be reviewed publicly only after the main trading strategy for December has concluded and it's confirmed that it won't affect the subsequent rhythm. So when everything is concluded and if our rhythm can't be messed up, that is when we can publicly disclose information. So yeah, We got a normal wedge. Not much information out of this other than Netflix is on a sell and it is not in a buy. So this is the highest form of professional integrity and protection I, Andrew Scott Whitemore, can provide. All right, guys. So we've got about 35 minutes left on our live stream seminar, and I have been streaming live for 1 hour, and I have been enjoying it. I've been loving it, and I love giving out this information to you guys. So let me go to the live chat and see if there is anything that you guys want to see. So Andy says, I think Christmas will light up. Yeah, Christmas will definitely. Yeah, so I see Andy. If there's anybody else in the chat that would like me to talk about anything, please let me know. I think we are having a good session so far, and things are going great. All right, guys. Cool, guys. Let me take a 1 minute break, and I will be back with you in 1 minute. And I shall see you shortly. Cool, guys. Please drop your anything in the chat, and I will get back to you. Okay, guys, I am back, and it is me, Mr. Andrew Scott Whitemore. Okay, and before I move on to the next section, I will be looking at our bad boy Tesla. Everybody's also not so favorite stock, as people are saying it is extremely overvalued. And we've had Mr. Michael Burry talking about it lately, saying that Tesla's stock is currently overvalued as of right now, and we need to have a good look at how things are going. So we've had Tesla have a nice churn, and we got a lot of information that we got a descending wedge. We got an ascending wedge, sorry, which could potentially mean that if price moves towards that resistance level and it holds there, that means institution is going to be holding in and keeping this stock alive. And that might be good for some, but if you guys have ever watched The Big Short, Michael Burry, the one who predicted the 2008 financial market crash almost 20 years ago, he is usually right on the things that he says. So, if we look at Tesla, we got extremely high volume, and Tesla lately has proposed changes to fuel economy rules and can lower their standards from 50.4 to 34.5 mpg, potentially reducing the value of regulatory credits that Tesla relies on for revenue. So yeah, guys, Tesla stock right now extremely bullish. Market is extremely bullish. We got the RSI, the relative stock index. It's significantly higher than the average amount. Okay. So let me go back to the chat and see if there's anybody wants me to have anything to have a look at. Please let me know. And yeah, I will definitely have a look. And yeah, guys, so please let me know in the chat once again, and I will let you know. Okay, so let's get back to our segment. So, why choose small cap stocks and the tactical advantage that small cap stocks have? So, contrasting I'm going to contrast the execution and structural advantage of small cap stocks for a disciplined team. Okay, so this trade was successful because the vehicle behind small cap stock was the perfect fit for our strategy. And we need to dismantle the rhythm that small cap stocks are inherent gambles, which they are not. Okay. And we can see Tesla is currently opening up on a positive. So if we look at the 1 minute, we should see some green. 15 minutes, we got an upward trend. 1 hour, we got an upward trend. 4 hours, we got an upward trend. We got an ascending triangle also. And if price moves above here and hits our resistance level, we could start seeing a slight dip. But if it stays in our resistance and if it holds in the resistance level, that would most likely mean that institution is pulling in and institution likes it over there, and most likely we got good information because of the Fed results. So the structural advantage for the trend trading. So we chose small cap stocks not because they rise quickly or they are exciting, because, but because they have a natural structural advantage that amplifies our discipline. And liquidity impact. So what about liquidity impact can I let you know? So large cap stocks like Apple and Amazon. Let's have a look at our bad boy Amazon over here. So yeah, it was in this support zone and it has left out of it with a big volume drop. So these large cap stocks are like cruise ships. They require billions of dollars in capital and initiate and sustain a trend. So our buying, even as a large group, is often absorbed as noise. Not on a small cap stock, but on a large cap stock, what we do is just noise. So small cap stocks are like speedboats. As long as the structure is clean and their direction is clear, once institutional or ununified capital enters, a trend is easily driven out. So the price movement is direct and clear. For a team like ours that focuses on unified rhythm, teamwork, and precise entry and exit, small cap stocks are easier to amplify the advantages of. All right. Easier to amplify the advantages of. And they allow us to capture clean trends that reflect our disciplined buying, not the chaotic noise of global capital flows. So, second, minimizing institutional strategies. Our strategy in December, which is phase 4, and our phase accumulation plus a multi-account collaboration. Structured layout is specifically designed to maximize effectiveness in small cap arena. Okay, so let's have a look at Amazon. Amazon, we got relative um, volume. We could see it's currently on it's on a churn as of now. And AWS launched AI factories, and new Nova models will boost AI. So CEO Matt Garman noted Amazon Web Services added 3.8 gigawatts of data center capacity, leading competitors. So Amazon has never paid dividends once again, and it's currently on a sell. So this would have been a good time to sell, and our analysts are saying that it is a good stock to keep in your portfolio. All right, because gains are usually high on this stock as well, and it is steady, guys. It is also steady. It's a steady one to look at and always keep a hold of. So let's adjust our trend line. This one is so far. What the what the hell? What the hell? So yeah, let's move it. Move it, move it, move it. All right. So yeah, that is our Amazon stock. We can see we've got a descending wedge, most likely indicating a sell, and then we will be seeing a pump onto the upward, and it will most likely stay in our support region as of over here. And once it does, it will be a good indication of where the stock is going to be going. Okay, guys. So we have a structured layout, and it is specifically designed to maximize effectiveness in the small cap area. And this strategy is effective on large cap blue stock chips. because our accumulation is irrelevant to their volume and its effectiveness is maximized on small cap stocks. So accumulation is less likely to be detected by external monitoring bots because the volume profile is more ambiguous and the rhythm is easier to control. And because the supply and demand dynamics are simpler, the structure is easier to see. And this means that the glide is more pronounced. Okay, so the risk is easier to manage because we can execute our entire phase 1 and phase 2 without generating massive slippage. So in other words, guys, small cap stocks are seen as volatile by retail investors because retail treats them impulsively. But for a systematic team like ours, they are the most controllable and advantageous battlegrounds to apply our institutional grade procedures. And third, rapid feedback for training team rhythm, and this is another crucial non-financial point. The feedback cycle of small cap stocks is fast. So a large cap trade might take months to resolve its structure. Okay. A large cap trade might take months to resolve its structure. A small cap stock can complete an entire structure. And accumulation breakout, which is distribution, so in a few days or a week or two. And this rapid feedback is vital. You can quickly and clearly see how the trend begins and how the shakeout occurs. So let's look at Broadcom. So when funds enter and when we exit, trading small cap stocks is not only an opportunity to make money, but also the best way to train your execution, understanding, and sense of rhythm. So our sense of rhythm is really important. In short, retail investors playing small cap stocks are amplifying emotions, and teams playing small cap stocks amplify advantages. And we choose the vehicle that rewards discipline, not impulse. Okay, so it rewards discipline and not impulse. Okay, guys, now I'll follow up. We got 16 minutes left, and let me go to the YouTube live, the chat, and if there's anything that you guys want me to have a look at, please let me know, and I will be able to check it out for you guys. But it seems you guys are quiet in the chat, and if there's anything you want me to have a look at, please let me know. As we got 15 minutes left, I can give you a quick overview of what will be the best places to be at and best stocks to look at. Okay, guys. So don't worry, I am here Mr. Andrew Scott Whitemore, please drop something in the chat if you want me to know and have a look at. Okay, but next, let me go to the final part of our seminar, which is our trading plan and our focus. So I gotta reiterate of our overall strategy, maintaining caution and opening the door for the next wave. Okay, so regarding upcoming trend opportunities, let me reiterate our overall strategy for December. So the December plan is consistency over volume. And our trading plan for this month is to select 5 to 10 targets from our pool that truly fit our system. And this translates approximately 1 to 2 high quality targets per week. And we've successfully completed one this week, and everyone's rhythm, execution, and cooperation, especially in the initial pilot. Okay, so in our initial pilot, we have been excellent, and I'm truly satisfied with the commitment to discipline. And our next target will have to have a lot of patience and precision. Okay, so Broadcom, let's have a look what's happening over here. When we drew this last week, we had it on an all-time high on Friday. Let's move our, and yeah, so we can now move our resistance box to this sector over here. Here is our resistance, and we got a new support level over here. So we can move this box also a bit. So let's move this bad boy over here. Okay, we got our support levels down here. And we got some new information, and we can see there's a nice glide for Broadcom. All right. So yeah, we can also see how this smacked here. It went all the way down and bought up straight as it pinned off this support level. You can see, guys, I've been doing this for very long. Even though I was looking at the 15-minute, I drew it so precise. It's insane, actually. If only you knew what I could do. But that's not what I am here to tell you. I am here to tell you some other things. I'm trying to get this biatch. Okay, cool. There we go. So let me just also adjust this trend line. Over there we got a wedge, not ascending or descending as of right now, but essentially in the initial pilot we have been excellent, and I'm truly satisfied with the commitment to discipline. I will continue monitoring the market if a target emerges that fits our rigorous system. Clean structure, clear capital inflows, and the correct volatility signature. I will try to lead you through another round tomorrow, Friday Eastern Time. However, the exact timing will depend whether on whether the market provides such an opportunity. And our team always acts when there is an opportunity and when it is ripe. We don't act recklessly, gamble, or try to rush the market. If the opportunity isn't structurally sound on Friday, we will wait until Monday. All right, on Monday's open. So we got the open for Monday and we need to prepare to execute as usual. So starting now, you can contact Sophia to register for the next target and tell her the amount of capital you can participate with. So starting this time, everyone who registers is welcome to participate. And there are no screenings or entry barriers, guys. There are no screenings or entry barriers. And we have confirmed the rhythm in the pilot. As long as you're prepared in advance and and in the right mindset and committed to test and strike the rhythm, you can join us immediately. So remember this: those who prepare in advance are more likely to succeed than those who cram at the last minute. So, guys, contact Sophia now, prepare your capital, audit your discipline, and be ready to execute with rhythmic precision that the December market demands. All right. So, we got 8 minutes left, guys. Let me have a look at Meta. What's happening with this bad boy? We had it up at a 4%. We had a massive jump over here. And we got a descending wedge. And Meta posted Q3 revenues of 51.24 billion, up 26.2% year over year, beating expectations by 3.4%. And the company also surpassed EBITDA estimates, indicating strong quarterly performance. All right. And the dividends for Meta is at a 9.17% right now, guys. And they have been doing excellent. And it's a strong buy signal on this descending wedge. And analysts are saying buy, buy, buy. All right. One that I want to look at is Coca-Cola. All right. Coca-Cola down to 70. Last week it was sitting at 73, which is also a good level. Well, let's just readjust our positions and let's move some information towards this side. So yeah, guys, and Coca-Cola is also in a position right now where their dividends is being paid, and the technicalities are saying it is a strong buy. A strong buy as of right now. Let me draw a line from here down to there. We got an ascending wedge, but I still don't want to look at it too much. And AMD, nice, it broke out over here, and it's currently also AMD's experienced rapid growth in the data segment, driven by a strategic focus on high computing and artificial intelligence. AMD's never paid dividends, and it is on a sell position right now. So let's just readjust this. We also have a descending wedge, which is this chip-like triangle. So yeah, guys, let's go through something like Microsoft. Microsoft. Why did I draw this all the way down here? Okay, rookie mistakes, guys. See, even if you're 30 years in the business, you can still make some rookie mistakes. Okay, so Meta on the daily. Also, we got a nice descending wedge, potentially indicating a buy opportunity. And so, yeah, guys, we got Microsoft shares fell 2.8% to 476 amid reports of lower target sales for AI products due to weak corporate demand, causing a negative market reacciones, if you know what I'm saying. And let's have something like Louis Vuitton, Moet, and Hennessy. Okay, we also got a nice ascending triangle. So Moet Hennessy's workers plan strikes due to cancelled profit sharing bonuses, and more strikes are anticipated at Hennessy in the incoming months. Dividends has been good, 2.6%, and we got a strong buy on this technicality over here. So yeah, guys, that is a good one to have. 634 on the LVMH, and its all-time high was at 902. So yeah, guys, and let's have a quick one at Alibaba. Alibaba is also looking to create their own AI models. No dividends being paid out as of yet. Strong sell. Let's have a look at Palantir. Palantir has been looking decent. We got low volume, high price, descending wedge, most likely indicating a buy. Okay, guys, as the price is being above the supported level at now, so there's a lot of things we have to take into consideration. Let's have a look at Costco. Costco, ooh, Costco, we got high volume, low price, and its sales rose 8.1% to 23.64 billion for the 4 weeks ending November. So we could also potentially be seeing a high sell as of right now because of this high. So if we look at this high, smackdown 1, 2, 3 touches, and if we also put a line from over here till there. Okay, we got our trend line, we got a descending wedge, high volume, and analysts are saying sell. That is the technicalities, but for us, it could potentially mean a good buy. ExxonMobil, we got medium volume, we got a sell, ascending wedge, and it most likely will be a buy. And for us, we could potentially sell if you are looking at the futures. And then let's maybe go and look at Oracle. Oracle is also looks to be doing better right now. Got medium volume and a descending triangle indicating a sell, and that could potentially mean a buy for us. Move potentially meaning that things would be going up. So yeah, guys, that's me. It's Andrew Scott Whitemore. And if there's anything else, please drop a text in the chat on our Telegram group to Sophia, and we will get back to you. So thank you guys. Hope you had a good stream, and please let me know if there's anything that you would like me to look at in the future. And yeah, let's have a good one and see